Why do we think now is a good time to invest in fine wine? Well, if we look at the Live X1000, which is the industry broad-based benchmark, we can see kind of a bubble formation from the start of 2020 to August 2022. And this was the market being driven by COVID-related factors. So first off, there was an increase in the money supply. Central banks were printing money to ease COVID-related issues through furlough payments. When you increase the money supply, that also increases the price of fixed assets, such as fine wine. A cohort of individuals had more disposable income. They weren't spending their money on normal things like travel and holidays. So they had more money to spend on their passions like fine wine. And people were also drinking more alcohol over this period. They weren't able to go out and socialize like they normally would. And these factors drove the price of fine wine. But this came to an end around August 22. Inflation rose due to the fact there was an increase in the money supply, and that caused central banks to increase interest rates. So higher interest rates are not good for the price of fine wine for two main reasons. First off, it reduces the risk premium from holding a liquid asset for fine wine. So there is capital relocation out of fine wine as an asset class, but also it increases people's propensity to save as opposed to consume, which is also not good for a consumable good. So we saw prices decrease, and we also saw the effects of COVID reverse, which is also another reason why prices came down. And the result was a 34-month correction. But where are we now? Prices have returned to pre-2020 levels. Forced selling has largely played out, and we're now seeing stabilization and early green shoots in the market. So it looks like an early cycle recovery entry point.